Now, there are widespread headlines on the crash in Indian stock benchmarks in recent months. However, there is another big red flag under the radar. With the bloodbath in Indian stocks taking the spotlight, a trend in the final 3 months of 2024 has gone totally unnoticed. Promoters have offloaded their stake at an unprecedented rate. Now, according to NSE data, the December quarter saw a staggering 22-year low of 41.1% promoter ownership in Nifty businesses. They sold their holdings at an unprecedented pace, a drop of 1.67% across the first 3 quarters of 2024 and 0.96% sequentially in the December quarter, is sending warning signals to investors. The data also shows that promoters cashed out before the current market correction, selling their stake while stock values climbed to historic highs. The timing couldn't be more revealing. Promoter holding shows the percentage of shares owned by a company's founders, family or top executives, and high promoter holding is seen as positive, indicating confidence in the company's future. However, the crash in promoter holdings in Nifty stocks suggests lack of confidence, and this comes when Sensex has dropped 4,000 points since a peak in September, wiping out 40 lakh crores of investors' wealth. Now, the relentless sell-off has left retail investors in particular reeling, and nearly a fifth of their wealth has been wiped out since late September. Last year saw retail investors enter the Indian stock market in large numbers through direct purchases or through mutual funds. They are now sitting on huge losses. Net asset values of fund houses have also fallen sharply as investor confidence continues to erode. The big question on everyone's mind is, when will the bleeding stop? Will the market find a bottom soon, or will the sell-off continue to wreak havoc on investor wealth? And will retail investors sell and keep away? With US President Donald Trump's tariff threats showing uncertainty about markets and the global economy, experts warn that there is more pain ahead. Fund managers, analysts and traders warn retail investors not to panic and are instead calling for patience and calm. An expert from a large brokerage house in Mumbai said, "Now is not the time to sell, but to sit on your investments without looking at your portfolio for a few months," quote unquote. For more on this, we are now being joined by Mr. Ajay Bagga, market expert, who's joining me live on the show from Mumbai. Mr. Bagga, thank you so much for joining me here on the broadcast. What's your take on the fall in promoter stakes in Nifty 50 stocks in particular in December?
Yeah, there are a few reasons behind this. One is, if you look at the last 10 years, corporates have deleveraged their balance sheets. And we saw that there was a lack of new issuance coming in. However, with the sharp growth over the last 10 years, corporates required new funds. So part of this is explained by growth capital being raised by infrastructure companies, by highly indebted groups, which came under observation because of some reports. So people like that have reduced their stake in a bid to shore up their balance sheets or get growth capital. The second has been what you referred in your segment, that promoters found the levels high enough and they have cashed out to some extent to invest into other options that were available. Some money has been taken off the table. Third, we must remember the government is about 10% of the market, the government holdings, and there also we have seen regular disinvestments coming in from time to time. And the fourth is private equity funds let go about 2 lakh crores last year in terms of disinvesting from their companies. So wherever these were already listed companies, you would see promoter holdings would have fallen. So yes, it is a caution when promoters reduce their holdings, but the reasons are more regulatory, more growth capital driven rather than an exit by promoters.
Mr. Bagga, now with the recent meltdown in the markets, what's your outlook for Indian stock benchmarks for March?
March is not looking too good. I think you will have a shallow bounce as we saw in the first hour today. some amount of domestic good news is coming through in terms of a GDP recovery that we saw for December, but the global cues are still very volatile. So we are expecting March to be steady. 5 months of fall have happened, which is again a 29-year record we have set. Normally, after such a fall, the markets tend to stabilize, but right now the global issues are too strong. So I would say still time to be cautious. We don't see a runaway rally anytime soon. That's at least 6 to 12 months away.
March doesn't seem too bright, as you mentioned, but any advice for retail investors in stocks and mutual funds sitting on huge losses during these times?
See, we have to look at our asset allocation, and I would say the incremental money, put some more money into fixed return instruments. That will help to even out your asset allocation. Selling at these levels in a structural growth story like India, it's not warranted. If you had to sell, maybe you should have sold earlier. If you want to create some cash on the side, say 5-10% can be sold. But I'm quite convinced that by the end of this year, the situation will be very different. And overall, India is a 20-year bull market in the making. Right now, even if the leading indices, which are at 15-16% down, if they cross the 20% and go into bear market, average bear markets last about 12 months in India. We have already gone through 5 months of pain. I would say 6-7 months of pain might be left if we reach a bear market at all. I don't think we'll reach a bear market, but even if that comes through, we might have 5-6 months more, and then we resume our journey upwards. So this is not the time to sell. I would say just steal your hearts and don't look at numbers every day. Don't look at your portfolio every day. Just wait through this time. It's a waiting period, but not a period to sell. Because remember, when the recovery comes, market will give 1-year returns in 2 weeks to 4 weeks.
So sit tight, stay calm, don't rush into sell, sit tight because it's going to take a few more months after a fall like this. That's what Ajay Bagga is suggesting. Ajay Bagga, market expert, joining me from Mumbai. Always a pleasure speaking with you, sir.
Thank you.